US election is just over a month away at the time of recording. While Democratic hopeful Joe Biden appears ahead in the national polls, he'll be more than well aware that this time 4 years ago, Hillary Clinton was in the same sort of position. But as we know, went on to lose, not through scoring less votes, none of it. She ended up by winning some 3 million more votes than Donald Trump in the final count, but she fell short of the method of counting through the Electoral College system. Welcome to this edition of IG Trading the Markets podcast. I'm Jeremy Naylor. Joining us today, we have Michael Guyard, a portfolio manager at Toroso Asset Management and author of the Lead Lag Report, a much followed report that's released within the market, and Jonathan Wood from Control Risks. Jonathan is a director of global risk analysis, specializing in North American politics, amongst other areas of interest. Gentlemen, thanks indeed for joining us for today's pod. Jonathan, I'd like to turn to you first, if I can. Unprecedented times for a number of reasons. What is the upcoming election looking like from your seat?
Thank you, Jeremy, and thank you very much for having us. This is, as you say, unprecedented times, both because of the COVID-19 pandemic, which continues to ravage the US more than many other developed, wealthy countries. We've just passed 200,000 deaths in recent days, because of unprecedented social unrest nationwide around police reform and racial justice, and because of a historic economic contraction in an election year. And I think one thing that's really interesting about this political cycle is that you take all of those major events, and they've had very little impact on the underlying trajectory of the race. Exactly as you say, this is an election that, before all of these events and today, remains likely to be determined by fairly narrow margins in a handful of key swing states. But overall, we do believe that given his durable lead at the national level and in those key swing states, that former Vice President Joe Biden is likely to win the election.
Do you think that COVID-19 could disrupt the election to the point of making the outcome unreliable?
So it's certainly having a significant impact on how the election is being conducted. We saw this during the primary season, and we are going to see it in the election, where in many states, early voting and postal voting are going to increase significantly. And this certainly has some both procedural and political implications for the election. On the procedural side, this surge of postal ballots, there's of course a huge amount of concern about how and when those will be tallied. And we do expect that the increase in postal ballots will increase the scope and probably the likelihood of a disputed or contested election, at least in some of the very narrow margin states. I think one thing that is perhaps less certain is what voting looks like on the day. The US has seen some declining case counts because of COVID over the last few weeks, but there is concern that between now and election day, we might be in a situation where COVID cases are increasing and where there might be rather more concern about voting in person. So that could also potentially be disruptive. And overall, that combination of COVID-19, a major public health crisis, and a sharp increase in postal voting, we do think increases the likelihood that close results are challenged by both campaigns on and after election day.
Michael, let's bring you in. Before we take a more detailed look at what's happening with the markets and your thoughts on where we are, how disruptive are presidential elections to market activity? What tends to happen in the lead up and in the follow through? Is there a pattern that we should expect to develop, which is typical of this sort of time of the cycle, or is it deeper than that? Are you looking at other factors that make this an unusual election so far as the markets are concerned?
Yeah, so look, when you look at the history of markets in lead up to elections, especially when they're relatively close and could be contested, generally around this time period is typically when you see higher volatility. It's usually within 2 to 3 months of the election itself. And that's confirmed by, for lack of a better way of saying it, this kind of hump that's occurred in the VIX futures term structure, whereby there's an expectation by the marketplace that the volatility index will be higher, really into October and November, and then kind of tail off afterwards. Now, there are a lot of things I think that are kind of worth thinking through about the term unprecedented here. No matter what happens to the elections, as far as who wins and even what happens in terms of policy, I can make an argument that we all know what the end game is, regardless of it being a presidential outcome that's Republican or Democrat, and the outcome is more debt. The unprecedented nature of the environment that we're in means the trajectory for more and more leverage in the system is only going to increase no matter who is in office. And I think that the fact that arguably is most likely the only scenario that is going to ultimately matter very long term, I suspect that's going to be a very big problem. And whoever is president is going to have to start reckoning with the fact that you can't keep on printing money forever to try to fund these deficits.
That's a very interesting point. And I think, Jonathan, to bring you back in on this, to what degree do you think the next presidency perhaps possibly is a bit of a poison chalice? I mean, Michael making some very good points there about some of the exceptional circumstances. But of course, COVID makes it even more exceptional. Poison chalice, or do you think it's a challenge that both candidates are up to?
Certainly a bit of a poison chalice. And I think Michael makes a great point about that long-term debt trajectory. And it's not the only way in which both parties are very similar in terms of their policy platforms. We also think that, for example, this increasing strategic competition with China would be basically the same no matter who wins the election. And it's safe to say that the next president, whoever it turns out to be, is going to spend most of their first term trying to resolve some of the deep challenges and problems that were posed by both the COVID-19 pandemic, which is not going anywhere anytime soon, by the economic recession. And those are going to absolutely occupy the next administration for years before it can turn to some of the other things that, for example, international business is concerned around, trade relationships, the geopolitical situation, and other external factors.
If you can keep your head.
When all about you are losing theirs,
what possibilities might you see?
If you can see it. The world is yours to trade and invest. See it, IG it.
So Michael, in your view, what is being priced in? Or is the market being too preoccupied with other things? I mean, I'm looking here at markets that are not too far away. I'm talking here about Wall Street, not too far away from record highs. I mean, to that degree, Donald Trump has performed. He's produced an environment in which corporates are flourishing. Seemingly, there's a lot of interest in the markets. And we are seemingly allowing corporates to do well in this environment. So to that end, I think it has to be said that Trump has matched up to expectations. But what is being priced in, do you think, now? Do you think the markets really do have a proper handle on the potential outcome of this? If Biden does win, where are markets likely to go?
So you hit on an important word there, which I'm going to push back on as far as Trump, and I think even regardless of whoever's president, right, which is creating the conditions, right? I always, when I talk about markets, when I do any kind of analysis in the lead lag report, always reference the idea that conditions dictate probabilities, probabilities dictate outcome. So you have to get the conditions right in that equation. I don't think these conditions have been driven by Trump at all. I don't think they'd be driven by Biden at all either. I think the conditions are purely being driven by what the Federal Reserve does. And, this issue of, if a president is up to task to deal with the leverage that's in the system, it brings up, I think, and I'd be curious to hear your thoughts on this, Jonathan, as well, an interesting, I think, existential question, which I myself have been bringing up in writings on Twitter and in various media outlets, which is, are we nearing a point where there's a question mark as to whether capitalism and democracy can coexist? The reason that I'm saying that is, as we've seen with both candidates, the way you get elected historically, whether you're a president or you're doing it on a local level, is you promise more. Promising more means more debt when you can't really increase the nation's tax revenue to any significant degree, given your starting point of existing high leverage. And if you only really get elected through promising more and more, that just means more and more debt. So how can you have democracy and capitalism at the end of the day really kind of coexist? I think that existential question, we may be seeing sort of the whites of the eyes of that being a debate here, as more and more the two parties are extreme in terms of free market capitalism on the Republican side, and arguably a much more aggressive sort of socialist agenda on the Democrat side. So, Jonathan, I'd be curious to hear from you if that's something you've thought about and how this election may be sort of symptomatic of a much bigger issue, given the divide in the country and this issue of leverage to economic prosperity that's maybe more fair to the average American.
Jonathan?
I think that's a very good and interesting point. I mean, what we would expect to see, certainly the way that both parties are trending at the moment, is very much towards a kind of big government consensus. There's some difference in the distribution of public spending. Biden, for example, has announced plans to, sink $2 trillion plus over 4 years into a green recovery. And I think we would probably see a slightly different set of priorities from a second Trump administration, but neither one seems aggressively committed to fiscal austerity or bringing down deficits dramatically. And in their individual ways, both sort of hope, and I think perhaps this goes to your point about the promises that politicians make to be elected, both sort of hope that some rapid economic growth materializes that makes this leverage and debt problem go away, which seems unlikely with an aging population and all of the other liabilities that the U.S. is accumulating both this year and in the past. The politics could well change depending on who becomes elected. I think it's probably likely, just as we saw after the global financial crisis during the Obama administration, that we would see a return of the deficit hawks or return of people calling for reducing spending in the event of a Biden administration. And we might see some replay of that more traditional divide between kind of tax and spend Democrats and more fiscally conservative Republicans in that scenario, at least politically, if not necessarily in practice.
Michael, this is an interesting point. This democracy capitalism question is interesting. The Democratic race, I think I'm right in saying, forgive me if I'm incorrect on this, but I believe there were more candidates that were put forward to become the White House representative of the Democratic Party than ever seen before. I remember looking at the early television debates. There's so many candidates up there. One of them, of course, Bernie Sanders, was quite left wing, and we've had our own candidate in this country, Jeremy Corbyn, which came up against the same sort of thing. Ultimately, he lost the platform. Bernie Sanders, of course, stood by, and Joe Biden, we've now got the candidate. One of Sanders' views, and I think was associated with him, was this idea of a reset, a capitalist reset, if you like, a new way of doing things. Do you think that Biden will bring about some sort of economic reset to the entire system as approached by the states? Is there the capacity for a president to do that?
I mean, I think the system itself will do that. I keep going back to the Fed, in this discussion, largely because, as much as there is a lot of attention on who's going to be president, arguably the fact that, going back to the term unprecedented, we have a pandemic, we have, by all metrics, what looks like an extraordinary deep recession, if not depression. I've made this point before, where despite all that, in the most bullish depression in history, which is only widening the wealth gap between the very wealthy and everybody else, the asset holders and the income holders. At some point, that reaches its natural limit. Whatever that natural limit is, I don't think it's necessarily something that's driven by policy from the president level, so to speak. There is a moment here which I think is going to be coming sooner than not, that will be very political whenever it does happen, which is that, given, again, the sheer amount of leverage in the system, you only have one of two ways out. You either have hyperinflation, which I think the Federal Reserve is attempting to sort of allude to with this idea that they want average inflation to run hot over 2%, even though, by the way, they've never really achieved that by their own metrics since 1997. Either you have hyperinflation deal with this leverage, or you have what I think is the most likely scenario, which kind of relates to the reset idea, everybody defaulting to the Fed, which the Federal Reserve is, I think, paving the way for with their buying up of corporate munis and junk. Now, both of those scenarios are very ugly and also very political. It's very hard, for any president to ignore rising prices in a hyperinflation scenario. It's also very hard for a president to ignore moral hazard that comes from everybody just thinking they can just keep on borrowing. And if you default to the Fed, there's no harm, no foul, because the Fed can't take losses. So, a long-winded answer, but I do think there is a a quote unquote reset coming. I am not certain at all it's going to be driven by any party or any president or any individual person. I think it's just going to be the system itself.
That second point you make, just to be sure, are we talking here about a devaluation of the US dollar? Is that what you're saying is the other alternative to hyperinflation?
It can be a force and signal for it, right? It's not clear, how you actually achieve that, again, because so if you do that through currency debasement, well, everybody else will do the same thing. All developed economies have the same issue, which is demographics and deflationary megatrends, which are very hard to counter from a demand perspective. So you have to really do it from a cost push supply perspective. That may be coming, right? By the way, meaning you could see cost push inflation if you see political will to finally get some kind of infrastructure spending done in the United States, and I even argue globally that that's sort of a hat trick that can be done to sort of get out of this deflationary pulse. I'd argue that's been permeating really since COVID. But again, I go back to, I think there's too much importance being placed on who the next president will be from an economic perspective. From a social perspective, I can understand the perspectives of voters. But at the end of the day, social perspectives are also driven by the economy. So it's kind of one and the same.
Jonathan, I want to get back to the point about the election, if I can. In terms of a potential Biden win, it would make Trump the first president, I believe, not to have had a second term since George Bush Sr. back in 1989. If Trump loses and breaks that 30-year trend of a double period in office, is it because the country has fallen out of love with the Republican ideals, the Republican politics, or is it more likely, you think, to really be aimed at the heart of Trump and that people just don't trust or indeed want him back in office? Do you see this as an election that's basically a protest against what we've had in the last 4 years?
In short, yes. I think the driving political factor behind this election is personal, and it is in large extent a referendum on Trump as a political leader, and certainly as a political leader during this time of multiple converging national crises. He would indeed be the first single-term president since George Bush. If he wins, he might be the first president to win after a recession since Calvin Coolidge, and that was nearly 100 years ago. So there's certainly a degree to which this is a referendum on Trump. And I think this really shows up in the sheer stability of President Trump's approval rating, not just this year, but during the entirety of his time in office. And the fact that, we have a very polarized US electorate where there is limited room for movement, very narrow margin of the electorate is probably legitimately undecided. And even some of those are probably, if you like, shy Trump voters. So that explains why it is. That probably explains a few other factors that show up in polling. For example, the lower enthusiasm for Biden, particularly among some of the core Democratic constituencies, and certainly what some of the voters who plan to vote for Democrats say about why they're voting in this election. It is all about Trump.
Of course, Michael, the other thing to think about is how the two candidates would deal with the rise and indeed rise again of China. We've seen Trump's attitude to China and the way he's tried to deal with that. I've read it said that Biden wouldn't be up to the job. I don't know whether you've got an opinion on that, whether you think that perhaps maybe internationally there could be some sort of different market reaction you might get in the States if you saw a Joe Biden win. What are your thoughts about how the markets abroad will react to this?
So, look, I think in general, the market's perception would be that if you have a Biden presidency, it likely means removing or taking off the table this sort of continuous tariff moves that Trump had been doing, throughout the administration throughout the last several years here. So I do think that conceivably could be seen as emerging market China bullish, right? Because I think there's a perception that Biden may not be as quote unquote tough on China, however you define tough. But it's tricky, right? Because I think if anything, what COVID has shown is that there is something you can argue that Trump was right on, at least conceptually, even though maybe the way that he went about it was not that positive. But this idea that a lot of the supply chains do have to come back into the United States, that there had been too much reliance on globalization, because at the end of the day, when you have a pandemic and travel is restricted and it's hard to get things that would normally come from China in a few days now taking a few weeks. Yeah, I do think that either way, there's going to be, continued sentiment toward bringing a lot of business back to the United States, regardless of whether it's Biden or Trump. It's really a question, I think, of just if tariffs are a factor in that or not.
You're referring there, of course, to Trump's America First stand that he put up with when he came into office. So, do you think if we get a second term then of Trump, we'll get Trump plus next time around? I mean, the second presidency is often marked by some, or I suppose they don't really have their eye necessarily on another term. They can't by law go for another term. So I guess he'll be concentrating solely on the impact his second presidency might have. Do you worry about that, or do you think there is, as you say, perhaps possibly maybe still more to do from Trump and get those supply chains back to a closer and more manageable local loop?
I mean, I think it's and I'd like to hear, Jonathan, your thoughts on this too, right? I think part of that also, can only be answered by trying to determine how Congress is going to look, and sort of if there's a majority or not on the Republican side, if Trump were to win. I think there is more to do, but look, I'm a big fan of behavioral finance. At the end of the day, everybody has an ego, and no president, no individual wants their second term to be marked by ongoing volatility and a difficult economic juncture. So if that means that Trump ends up getting reelected, I am fairly confident that his legacy, he doesn't want his legacy to be that China and U.S. markets collapse because of ongoing, saber rattling around tariffs. I think that's probably more of a motivator than anything else.
Jonathan, do you see us possibly heading into a period where if Trump does get a second term, he will become sterile because he'll have no support within Congress, no support for pushing his policies through, and it will actually end up being a bit of a limp 4 years. Do you see that sort of situation arising?
So I would agree that the control of Congress in this election is absolutely essential to what the policy environment might look like in a second term for Trump or a first term for Biden as well. But we do believe that those underlying trends that you identified during Trump's first term, America First, the deliberate, breaking of continuity with some of the traditional modes and objectives of U.S. foreign policy, the reliance on unilateral tariffs, sanctions, export controls, and other more coercive mechanisms, not just against, if you like, U.S. Adversaries, but indeed close historical allies as well. We think that would probably continue, not only because that seems to be the direction of travel, but also because those are the people in the administration crafting those policies. That's where they're coming from, is that much more hawkish perspective. And in a second term, I agree with Michael. I think that the administration might well have some room to craft that compromise with China and potentially reset relations, but there is a lot of countervailing pressure, including from Congress, that might make that very difficult to do. And in contrast, I think one of the important policy points about this election is that Biden and the Democrats aren't necessarily coming from a completely different direction on many of these issues. If anything, getting tough on China, indigenizing supply chains, bringing supply chains back to the U.S., revitalizing domestic manufacturing, that same agenda is something that they also embrace. But the difference is probably in approach more than in objective. Certainly Biden has said, and Democrats in their platform have also said that they would return to a more traditional and familiar mode of working through alliances and multilateral institutions and trying to build partnerships and collaborations with like-minded countries. And so in some sense, we might see a turn back to those more multilateral exercise of US global power instead of the more coercive unilateral one, but both would be directed at those goals of, redeveloping the domestic economy, confronting or at least competing more effectively with China globally and in Asia, and probably not a great deal more trade liberalization.
Okay, Michael, let me just round up, if I can, with one final question to you. This is a markets podcast, so I thought perhaps I'd just take a step into your personal area, if I possibly can, and just ask you how you are preparing things for going into this election period, and the sort of way you see people best prepared to have their finances laid out as we go into this period of election?
Look, I have a bias because I'm kind of known as this risk on, risk off manager. I run the ATAC rotation fund that's, at least as of this conversation, up roughly 50% for the year. That rotates around equities and treasuries. And the primary focus for me is always around risk and trying to get ahead of volatility before it's too late, primarily by tracking historically proven leading indicators of risk. Now, very short term, the fact that the utility sector, which is historically a tell on rising risk, is outperforming. The fact that long duration treasuries are outperforming intermediate, another risk off signal. The fact that lumber has essentially collapsed. Lumber, which is a tell on housing, which is a tell on consumer wealth and risk on sentiment. The fact that that also so aggressively reversed. Everything is pointing to some kind of storm coming. Now, whether or not the accident takes place will only be known with hindsight. And the accident may not just be something regarding the presidential election. It could be regarding some of these concerns around suspicious trading activity or flow of funds in European banks, or COVID in the fall. Whatever the reason is, the thing I suggest to all investors here is you have to really evaluate what diversification really is. Most investors have a 60-40 stock bond mix. The problem is that 40, that bond allocation, does not protect like it used to because yields are so low. And going back to what we talked about earlier, those yields don't compensate you for either of those two extremes of either hyperinflation and I say and or purposely, defaulting to the Fed. So given all that, the best thing anybody can do in this kind of environment is try to scale back overall sensitivity to beta, meaning to the overall stock market, and try to get diversification away from asset class because you don't really get that anymore, especially with bonds, and try to get it more from strategy. The challenge there is that it is very hard to find things which truly march to their own beat. Gold is one of them. I'd argue my fund is one of them. But I think in general, the diversification matters more than ever because the range of outcomes is so wide. The thing is, most people are not diversified because stocks and bonds at the end of the day are kind of the same. So you've really got to kind of think about veering outside of that to protect a portfolio.
Interesting stuff. Michael, look, thank you so much indeed for joining us. Michael Guard, Portfolio Manager at Toroso Asset Management and author of the Lead Lag Report. Joining us along there with Jonathan Wood, Director of Global Risk Analysis at Control Risks. Gentlemen, thanks so much indeed for joining us for today's IG Trading the Markets podcast. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.